Hello, everyone. Thank you so much for joining us for episode 2 of This Weekend in Review with Kayla Frerot of Kayla Frerot of ScotiaBank, home financing specialist, and myself, Alex Ward, broker owner of Maxwell Devonshire Realty and the 2022 Broker of the Year for the Realtors Association of Edmonton. Kayla, thanks so much for joining us again. How was your Mother's Day weekend?
It was really good. We spent a lot of time outside. It was beautiful out this weekend.
Nice, nice. I hope you were treated like the queen you are. And speaking of royalty, I know this week you're going to divulge some royalty secrets about what is the best way to go about your home buying journey, whether you're a first time home buyer or this is your fifth, seventh, eighth, 100th house.
Absolutely. Yes, so I figured today I would go through our pre-approval process and the start of your home buying journey. I do get a lot of questions on this, whether you're a first-time home buyer or you haven't bought a house in 10 years or even 2 or 3 years. There's a lot of policy changes going towards how you get qualified for a mortgage. So I figured I would touch on that and kind of the process of how we start our pre-approval process. So first off, you really want to get a pre-approval when you're first starting to look at buying a home. Not only does that give you buying power when you're wanting to make an offer on homes, but it also gives you a sense of comfort in exactly what you can afford. You can talk to your home financing advisor about how those payments look for your monthly budget. Just want to make sure that holistically you are very comfortable with the home buying process. So what we first look at when we take your pre-approval is we're going to look at your credit. So normally financial institutions, and this isn't saying that you can't get approved without it, but we do like to see 2 trade lines open for 2 years. So meaning you have a credit card and a car loan, or 2 credit cards, or a personal loan, a line of credit and a credit card, whatever that might look like. And the reason why we look at that is that we want to make sure that you're making your payments on time and you are making your payments in general. When we look at your credit, we look to make sure that there's no collections on there. And again, sometimes when you're not looking at your credit bureau all the time, you might be surprised at what's on there. Or sometimes if you get your mail stolen or your wallet stolen, there might be something on there that you don't know about. So it's really good to take a look at that every once in a while. Your credit bureau, you can access that on your banking app. Most banking apps will have your credit report on there, or you can just go online to Equifax or TransUnion and sign up and take a look at that as well. So really important to see what's on your credit bureau. Make sure you're making your payments on time. That cell phone bill, make sure you're making it on time so it doesn't go to collections, because those are all pieces that we look at when we're looking at lending hundreds of thousands of dollars, right? So credit is a big piece of the pre-approval process. And then we also look at your income. So what does your income look like? Do you make wage? Do you have guaranteed hours? Do you work seasonal? Do you have salary? And do you get any overtime or bonuses? And all of that will kind of play into what we're going to look for documents. So say you are a police officer and you make a lot of overtime. We're going to look at your last 2 years T4s so we can take an average of that overtime. If you're straight hourly, we're just going to look at your pay stub, maybe get a letter of employment, look at your statements, that kind of thing. So definitely want to take a look at your income. Another piece of that is also business for self. I get lots of questions for business for self. When you are business for self, depending on your write-offs, you might make, let's say on paper, $400,000 a year. But with your write-offs, when you report to the CRA, you might only make $120,000. I mean, that's a lot of write-offs, but just for example's sake. So we want to take a look at what that income is after your write-offs. We can do add backs and pieces like that, but we just want to make sure that if you're going online and just putting your numbers into a calculator, we want to make sure that you have the accurate income that we're going to use when we're doing the qualifying process. So income's another piece of that. And then also your down payment. So you have to have at least a 5% down payment if you're wanting to purchase a home. So that 5% can be gifted or it comes from your savings. And then we also have to have closing costs. So if you have less than a 20% down payment, we have to show that you have closing costs. So 1% of that purchase price has to be in your account to show that you have money for lawyers, moving costs, inspection fees, all those kind of pieces that play into getting that final possession of the home. So we have to look at that. So we're going to ask you for some statements showing that the money has been in your account for a certain amount of time, depending on the amount of your down payment. And then we also look at your savings and your assets. And the reason why we look at that is just to see that you're not spending every single dollar on your down payment and you still have money left over, because let's say you move into the house and it needs new shingles, or let's say your heating goes down or something happens in the house that you're going to have to spend money on. You need to make sure that you have funds for that, because you don't want to be borrowing funds to fix the shingles or fix something, the taps on the sink or whatever that might look like, right? So those are all the pieces that we kind of look at for when we're doing the pre-approval process. Just wanting to make sure that you're starting to think about those things when you're thinking about buying a home. But the biggest thing is just call your home financing advisor, because we go through all those pieces. We go step by step. We give you all the information. We can run a bunch of different scenarios. If I buy a $500,000 house compared to if I buy a $300,000 house, what does that look like for me interest rate wise and payment wise? So lots of lots of things to prepare for when you buy a house, but it is very exciting, and that's why we want to be part of that journey with you, is just to make sure that you're very comfortable, but that you're very excited and you're sure when you're making an offer with your agent.
Yeah, it's
Yeah.
funny that you bring up the cell phone. Oh, can't tell you the number of times your cell phone or whatever charges you. You're like, I'm not paying these buggers. They're gonna screw them. Well, no. You know who gets screwed? You.
You
But
do.
the cell phone company, Rogers, Telus, Bell, they don't get screwed. You get screwed because it goes
Yeah.
on your collections, and that will have a major negative impact on your ability not just to buy a house, but to finance anything. Now, fortunately, they have the ability at underwriters to see things and make a decision that makes sense, but don't even cross that bridge, right? Your cell phone company is always winning. Fight it as best you can, but I'll know at the end of the day, if it goes to collections, you're having a hard time. And number two, great point that Kayla brought up, your extra, if you're an insured, you need that extra 1%. So when you're thinking, oh, I only need 5% down, no, you need 6% down. Oh, I'm putting a full 10%, it's everything I got. No, you need 11%, right? You need to make sure that you're saving up that extra 1% because it's a requirement from CMHC or Sagan or any of the other insurers, right? So, two very valuable pieces that definitely get overlooked a lot, not by just the buyers, but also by the realtor that's helping them work with them. So, great information. Now, Kayla, how long is a pre approval good for?
120 days.
And if should a home buyer that has gotten their pre-approval, does the strength of the pre-approval change at any point over those 120 days?
No, so we would lock you in. So let's say a scenario would be that interest rates increase during that 120 days. We have you locked into a rate. So everything stays the same within those 120 days. Let's say within those 120 days, you either quit or lose your job. That's going to change the pre-approval. That's a big piece there. But if everything stays the same, everything stays the same on our side. So at the 120-day mark, let's say we are locking into a higher rate, then that qualifying rate would increase. So that may change your pre-approval. Or let's say the interest rates go down, ideally, then of course your pre-approval amount might go up because we're reducing that qualifying rate.
Wonderful. Well, no matter what, it's always good if you're in the home buying process, be close touch with your home financing advisor, because then that way you're always on the same page and you know exactly what's happening. Kayla, thank you so much for joining us again today. And if you're listening to this on our podcast, hit the follow button. Watching this on YouTube, hit the subscribe button. And if you're watching on any other social media platform, do whatever the things you need to do to make sure that you get all of this wonderful content on a weekly basis. And our next podcast will be on Monday, May the 22nd, which is a holiday. We're still going to be running it. So hope you're able to come on down and take a listen, and we'll see you then. Thanks.
Thank you.